Hello and thanks for checking out TheChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hello MJ friends, currently in North Carolina, went straight from the summer in Florida to the dead of winter in North Carolina, right into a cold front. Got a fire next to me and a new robe, and I'm ready to talk about some MJ stocks. We're going to look at all the major names. We're going to look at some US names, some of the smaller Canadian MJ names. First off, we got to look at the upcoming date of earnings, because those are important, obviously. So we've got Planet 13 and ACB on Monday. That's going to set the tone for the week. And then we've got Cron and TLRY on Tuesday, and then Canopies on Wednesday. And that's all for this coming week. So obviously we need to be paying attention to this. If you are swing trading into any of these earnings, you are at risk, higher reward for any kind of reaction. Personally, I'm going to be sitting all cash on the sidelines because I don't like playing earnings, because it's a coin flip unless you're doing significant in-depth research fundamentally and are confident that you have an edge on the market. It's a coin flip. And in this instance, I don't believe we're going to see any significant breaks from our weekly ranges in reaction to these earnings. I don't believe we're going to have any significant, obviously the earnings for recreational sales opening are not going to be on there just yet. So personally, I'm going to be sitting back and watching to see how these weekly charts play out. So 2 videos ago, we were talking about hedging long-term positions, anticipating weekly lower highs being set. At that point in time, the candlestick, we were up at the high of the candlestick, and there was no sign of any pullback. And it's important to anticipate the most likely scenarios of patterns before they happen, because just 2 days later, it's playing out exactly like we anticipated. But if you wait to be sure of that, I mean, at this point, we're now down almost 20%, maybe about 15 to 18% from where we were up at the highs. So it is absolutely following through at this point with our high, low, lower high, and we're going to look for the bulls to form a higher low compared to 31.82 and stay in this weekly tightening range probably until the end of the year. It is possible that these earnings have some kind of surprise that could potentially break this range, and of course any kind of significant news could break this range as well. But without either of those two things, we are going to be looking to stay within this range for at least a few more weeks. And we have the S&P 500 giving us that same lower high. So I personally went bearish on the S&P 500 the day that I talked about that, which was, I believe at this point, that was maybe Wednesday night. And I talked about it in the SPY video. I made a long 10-minute SPY video talking about hedging. So I am in a bearish S&P 500 position right now. But other than that, I'm all cash. I did trade CGC on Friday a couple times, actually 3 times. First 2 times were on the way down. And it was a very odd morning. Didn't get the setup I want. When I talk about making entries for oversold bounce plays, I match the aggressiveness of the bears. If they dump the price down, I'm more aggressive buying because of that V-shaped recovery. This was an instance where it was just a slow grind down, and I was sitting there scratching my head, and there were multiple times where I entered a position, but I did so with half of my normal position because I was not confident, because it was not the setup that I wanted ideally. And I was live during the morning. There were so many times where I kept saying things like, you know, if we break $40 on this push down, I'm going to start scaling in. And then we would bounce, and that changes things. So if on the first candlestick pullback, if I say if we break $40, I'm going to start scaling in, and then we bounce, that doesn't mean I'm going to start scaling in once we break $40 from there, because the setup has completely changed because of that little bounce. It's cooled off RSI levels. It's balanced things out enough that I want to be even more patient. So I did trade 2 little scalps for 20 cents each on my half positions, which added up to a total of 20 cents on a normal size position, which is the day maker for me. So at that point I was all done. And then I looked to play from the bottom. We had the hourly RSI oversold, so I knew to be looking for an hourly oversold entry opportunity. And it's not here. Oh, I got to put extended hours. There we go. So the hourly was oversold. So I saw a bounce play out on the 5-minute time frame where we had, from the low of the day, a pretty solid move that followed through. And it was this move right here where we went from 38.78 and we made it all the way up to 39.50. So as soon as I saw that bounce, I said, all right, we've got a low enough RSI on the hourly time frame that I'm comfortable enough starting to scale into a position. And what I did, what my game plan was, is I looked at the 2-minute time frame and I said, I'm going to look for the higher low. So we saw the bounce. We rejected from 39.50. I said I'm going to look for the higher low. And as we pulled back to 39 psychological, I made my entry. So my entry ended up at 39.10 right here. And I said to myself, okay, if we fall back down and set a new low of the day, I'm going to save the other half of my position and add on a new low of the day because the hourly RSI at that point will be approaching the lower 20s. And that would give me a normal position size with the hourly RSI in the mid to low 20s. And I also said if we break to see continuation with a trend change on the 2-minute with a little higher low and higher high, I'll add the second half of my position there as well. So ended up adding on the break of 39.50. I actually set a stop buy, and I normally don't do that because I'm there sitting at the computer and watching, but this was just an easy game plan for me. I said, if it breaks that level, I want in for the second half of my position. So we got that. I scaled out on this candlestick half of my position right at just above $40, and then I scaled out again at 40 in the 40s on this other leg up. And my game plan was to try and swing that position for an hourly oversold bounce. But when you give me 2% in 30 minutes, I take it every time. That changes my game plan. 2% gain in 30 minutes, that's great. I'll take it and I'll just reassess the situation and then set up for another trade. So I did take that profit, and I love the setup here at the end of the day with the weakness heading into next week for the potential that we do see another flush down and an oversold bounce on the hourly finally get going. If we do see another leg down and a break of 38.77, the hourly RSI will be oversold, and I do expect some dip buying heading into earnings. The one scenario would be if ACB misses earnings big time and has a very bearish reaction, we will look for a sell-off in the names that have yet to report earnings. That happens all the time in a lot of sectors. The first name in a sector gives its earnings, and then everybody else in that sector responds to it and correlates to that reaction to a certain degree. So if it's a normal reaction to ACB and nothing stands out with any red flags, we will look for a bear break as a potential entry opportunity because I will anticipate some bullish buying heading into earnings after the sell-off the last 2 days of almost 20%. So weekly time frame, we're going to look for tightening ranges. Daily time frame, we're going to look for a higher low. Our base of support is down here at 35.85 and 35.87. I'm anticipating a higher low compared to that level. Bull volume on the way up. No red flags on bear volume on the way down. We knew we needed daily consolidation. That Jeff Sessions tweet only delayed the inevitable, and it didn't even delay it by long. Pretty much delayed it by about an hour of actual trading time. And we're looking for that higher low. Because of the size of the pullback at this point, when we do form a daily higher low, we're going to look for a lower high and a tightening range on this daily chart to form. And SPY is in a pretty similar scenario of what we're going to be looking for as well. So no sign of the bounce, close at the low 2 days in a row, but we are looking for that bounce and the daily higher low to form early this coming week, with the wild card being the ACB earnings reaction. Here's the weekly time frame for ACB. We've got the high, the low. Gotta always double check that I'm recording in the middle of these videos. Made some mistakes recently. So we got a lower high being set on the weekly time frame. Our range is 725 to 1065. That's a pretty wide range. So we're going to be looking for a weekly higher low to form compared to 725. Again, unless there's a big miss on earnings or a big huge beat on earnings. The pullback at this point, we didn't establish any daily support on the way up. So we're patiently waiting for an hourly trend change to indicate that the daily higher low has formed. If I want to be a patient trader, I'm waiting for that hourly trend change. But by looking at this daily range and knowing that when we form that higher low and anticipating the lower high after it, there's not going to be a whole lot of range to play with within there. So I'm not going to wait for the hourly trend to change because that's going to give up too much opportunity with regards to that play I'm talking about on CGC. So that's why I would be looking to buy into weakness if we get another leg down on CGC rather than waiting for the hourly trend change, because the ranges on the daily chart are going to be tightening, which means less opportunity for volatility and movement. So hourly time frame here, we do not have extended hours to be watching, and I'm currently charting ACB and APHA on the Canadian exchanges because they are still the volume leaders, and that's a little bit surprising to me because CGC and CRON very quickly, when they listed on the NYSE and the NASDAQ, they quickly shifted over to the US side getting new volume or more volume, and that's not the case for ACB and APHA. So I'm going to continue to chart whichever exchange has the most volume because in my opinion, that's the sector leader. Or I should say that's the leader of the two dual listed tickers. So we've got our hourly chart is tightening up here. 925 is a low. We've got the high of the bounce at 972. If we look at the same thing on CGC, just to get a tightening range, it would be 3877 and then up to 4070. So that's the first range to be watching, closer to breaking support than we are to resistance. ACB could potentially hold that support if earnings have a decent little reaction, but watch that tightening range and watch for the change in the hourly trend to indicate the daily higher low has been established. APHA, weekly time frame, not as significant a big upper wick, but we're still looking for it to trade in line with everybody else. Did hold up a little bit more bullish on Friday, and if we look at the daily chart, we can see that lower wick and bulls buying the dip. This is a much more bullish scenario than those other names are in. And with CGC closing at the low, it's almost a completely opposite end of the day scenario. So we're looking for the daily higher low to form. At this point, it's pretty convincing that the bulls could form that higher low at 1556. And again, we look at the hourly time frame. What's needed for this trend change? Anything under 1672 is just a lower high. So if the bulls come out first thing on Monday, can't break 1672, we then look for a pullback and an hourly higher low and an equilibrium. If the bulls do break 1672, we see follow through and we say our daily higher low has been established. And this is close enough to a bull flag that these bulls are going to be looking to try and see continuation on this daily chart. So it's absolutely worth watching for the strongest name here, because if we do get that bull follow through, that's definitely going to have a ripple effect on all these other names, and bulls are going to say, hey, APHA saw continuation, maybe these other names can as well. So a tightening hourly range to be watching, and we'll see if that bull momentum can continue into early next week. Cron on the weekly time frame, same thing, big upper wick setting that lower high on the weekly. The daily time frame, scouting for a higher low. Volume's great. Bulls love this volume. We saw 7 green days in a row with no support established in terms of a clear higher low. So this is very healthy. There's no red flags at this point. So we're going to be watching for when that higher low forms. The hourly RSI at this point for Cron is not oversold. So it looks like CGC is one of the most beat up on the hourly chart, but it's a tightening range here as well. 841 and 845 are supports, and anything under 893 is just a lower high. So if we see bulls come out Monday first thing, again, we have to be watching the hourly time frame, because we know that if we don't break the top of the Friday hourly bounce, it's just a lower high, keeping the bears in control of the short term. So that's the most important level to be watching. If we break 841, there's not any clear support nearby. We've got 815, 8 psychological, and then 776. So we have a couple levels to be watching, but no clearly established supports like the bulls would hope to see in terms of having some comfortability. So right now, if I had to rank them, APHA, clearly, actually, let's get TLRY done here, and then we'll rank those top 5 Canadian major players. So we got the high, low, weekly lower high being set. Daily chart, no sign of a higher low being established just yet. And volume, again, not any major red flags, although it's only really that one big bull day of volume. If you take that away, it's absolutely a lot of selling pressure compared to the initial bull move on the way up. Hourly time frame compared with everybody else. Hourly RSI is closer to oversold than every other name aside from CGC. We've got the low, the high. Bulls are trying for a higher low at 108. Anything under 119.59 is just an hourly lower high. So at this point, if I had to rank them, APHA is clearly the strongest. I like the volume on Cron. We're no sign that the higher low has been found on the daily, but the bear volume is great, so I would put that closer to the front. CGC is one of the weakest due to the close near the low of the day and close to being oversold. And ACB, TLRY, and CGC pretty much all the same. So that's how I'd rank those 5. Now let's look at TGOD. TGOD F is seeing daily consolidation. At this point, there's no red flags on this consolidation. We ran up in a huge way, a 100% move, and we need to pull back and form the higher low. And at this point, the hourly time frame is not giving us an indication that that higher low has formed yet, but we have a very clear support level. We can call it 4 psychological. We've bounced off 401 and 404. We've got resistance at 418. Bulls have to break 418 to shift this momentum. That's the top of the Friday bounce attempt. We traded under 415 for 6+ hours, and we have to break that level to start to shift momentum and for us to say, all right, our daily higher low has been established, and bulls are going to try and make their way back up to $5. So another tight hourly range to be watching Monday first thing, and a break of $4 means take a step back and be patient, bulls, because we are going to enter a new area with a lack of support, and that's the last thing that the bulls want to see short term. LDVTF, this is Cura Leaf Holdings, I believe. Sometimes the tickers don't match up, and that's correct. Cura Leaf. Some of these tickers, man, they got to uplist and change them. So when you run up and you're a recent IPO, there's way more volatility. It's higher risk, higher reward. No support established on the way up, and we just ran a huge amount, almost 100%, 80% plus, and we just gave it back. So we're looking for an equilibrium now. This is a bottom fishing play with support of 565, and is the potential to make any entry in the, ideally, the upper $5 range, but looks like we've only dropped down to 613 at this point. But making an entry, setting your stop below 565 in case we hit a new all-time low, and looking for an equilibrium to play out. Looking for a higher low compared to 565 as traders like myself and bulls defend that all-time low, and then we look for a bounce and a lower high to form. So keep an eye out for that potential setup. I would definitely be watching this into this coming week for that support level to potentially hold. 680 is a double top of resistance. Anything under 680 is just an hourly lower high. Need to see the hourly trend change for us to be confident that the daily higher low has been established. We've got a couple companies coming out in the US with their dilution news, and this is them selling shares, which is why they are public, to raise funds, selling shares for funds, for expansion, for paying salaries. I talked about this in depth in the intro to USMJ stocks, the hour-long video on the YouTube channel. And this is a big risk for long-term positions. To be able to drop 10 to 15% overnight is something that I personally do not want to expose myself to. So I have yet to establish, again, long-term positions in this space. And the reason most recently was because weekly lower highs was so likely to form. So I didn't want to enter long-term positions until we see this weekly chart play out. And if these weekly tightening patterns break bullish, then I'll look to establish longer-term positions. And longer-term meaning looking out weeks, potentially months. But that being said, the U.S. environment, again, it seems like things are moving quickly, but we have to remember that we're dealing with government, and quickly could mean 6 months, 18 months. So just keep that in mind. The longer it takes for legalization or federal changes in laws, the more shares are likely going to have to be sold to fuel expansion, to fuel costs and expenses. And again, until the doors are open in a big way, that's going to be the case, or until we see, further mergers and acquisitions, which we've seen a few of, or if we see companies come in like Constellation and give an influx injection of capital that causes these companies to not need to issue those shares. So MedMen and it was NBEV both came out with bot deals. And the good news about this is if you are cash, you are now comfortable with that these names are unlikely to come out with dilution news anytime soon. So as far as the 10 to 15% hit overnight, that's not a risk anymore. Whereas any other USMJ name that has not had a bot deal anytime soon, that's a risk that is going to be much higher than these names that have already gotten that out of the way now. So a clear lower high and lower low on MedMen with a bear break. The weekly time frame is an equilibrium as well. We've got the all-time high, low of the pullback, our lower high was set. Bulls really want to hold 420 and hold that higher low to stay in the weekly tightening range. So potential bottom fishing play with 420 as we approach it, and it's a clear equilibrium. You can see the high, low, lower high, looking for that higher low, and then we'll look for another lower high and a tightening range into potentially December. NBEV had the gap down open, so we're looking at key support at 356, and it looks like that did break, drop down to 345, so that's a lower low, and that's a key bear break. And the fact that we did not see more significant follow-through is a little bit of a sigh of relief for the bulls. But after this support level of 345 now, we're looking down at 304. That's a huge amount of space with no clearly established support on the daily time frame. And the weekly chart at this point has pulled back extremely significantly, and there's a lot of range here. NBEV is a name that's not likely to hit an all-time high anytime soon. There are other USMJ names that are positioned much better to do so, and we would need well over 150% to get back to that all-time high. So for that reason alone, I would look to other names having nothing to do with fundamentals, only technicals, and where we are standing on the chart. I would be looking for other USMJ names that are closer to areas with a lack of resistance. CVSI had a bearish reaction to earnings and a significant pullback. So looking at the weekly chart, we did have a couple bull breaks. Really, the most important support on the weekly to maintain this uptrend, you can see we had the low of the initial pullback, higher low, higher low. So the most important support level is 460, which is approaching. So we have to see if 460 support can hold for a key weekly level. The pullback on the daily time frame was magnified by a bearish reaction to those earnings, but there was a really nice trade opportunity that a member pointed out on Friday as a bottom fishing play with 495 support. Very clear bottom fishing play. So we had support at 495. We had a double bottom at 495. And on Friday, someone said, hey, is this a bottom fishing play with 495 support? And the answer is absolutely. If you make an entry anywhere near that and put your stop below it, the risk is small. And look at the reward here. let's say you made an entry even a little bit later at 5:05, the bull move on Friday went up to 5:39. So that's a gain of 34 cents where you would be risking about, with some slippage, maybe 12 cents. So that's almost a 3-to-1 risk to reward, or reward to risk scenario with that bottom fishing play. But it's a tightening hourly pattern. We have the bounce off 495 originally, now a lower high on this bounce, and this is a descending triangle pattern. Horizontal base of support and lower highs in a tightening range. And we'll look for a break of this tightening range, either a break of the lower highs on the hourly or a bear break of 495 sometime Monday or Tuesday this coming week. TCNNF had a gap up open. I believe they had acquisition news on Friday. Again, double check me on the fundamentals, trying to keep my head wrapped around all of these companies in US and Canada. There's a lot going on. So it's a bearish engulfing candlestick with a gap up clearly for selling and a lot of profit taking. And the hourly time frame shows all that pullback, where we are now looking at next support level of 1150. And from 1150, we're looking down at 11 psychological. I don't like this name. I like the company. I like their footprint in Florida. I don't like the fact that the governor race turned out the way it did. That was not favorable for MJ legalization. So we're probably going to have to wait till 2020 on Florida. That's a bit of a setback. We are expanding into other states for this company, but again, Florida is the spotlight of this company right now, and rec in Florida legalized would be huge for this company. But the bottom line is why I don't like it is the volatility and the illiquidity. I mean, the fact that the ranges of these candlesticks of 981 to 1245, that's a huge range. That's a 30% range. And you might say, well, as a trader, don't you like volatility? And the answer is yes, absolutely. But this is not, I mean, look at the 5-minute time frame. It's just not fluid. It's not liquid. And there's a lot of space in between bid and asks. There's a wide range. It's not tight. There's not a lot of market makers making the market. That's when you have tight ranges like CGC, it's because there's a lot of market makers, a lot of institutions that are making the market, that have a bunch of orders on both sides of the bid and the ask. And on a company like this, you don't have that, specifically because it's on the OTC, but you don't have that market being made by all these different players. So there's a bunch of space, and that's why it can run so hard and dump so hard, which is just what we saw with Curaleaf Holdings. It dumped so hard and ran so hard because we don't have an efficient market being made by lots of players with lots of shares and lots of money. So that's where we stand as we head into this coming week. There's a lot to watch. Again, those earnings are going to be on top watch. ACB is going to set the tone to start off the week. We're looking for the weekly time frames to continue to tighten, and we're looking for an hourly oversold bounce on CGC. I would like to see one more leg down and look to be scaling into a position, anticipating some bulls buying heading into the earnings report due to the discount from the last 2 days of pullback. And that's that. I hope you all are well. Hope you have a good weekend. And not going to get a video out, probably not every day this coming week, as I am traveling and seeing friends, but I'll do my best. See you soon.